Right, traders, welcome back to the channel. Here we have a video that somebody requested me to make through my Discord channel, and it's essentially looking at how you can use the London session or the London session strategy. Now, there's probably a lot of videos out there that explain this. I aim to break this down in terms of manipulation and liquidity and how you can use a London session in your trading, right? So just before we get involved in the video, just to say that if you use the code Easter Sale, so there'll be a link in the video description, the code Easter Sale will give you 30% off all Liquid FX packages. So that being said, let's get back to the video. So what we have over here is we have the London session strategy, as I call it, right? So what we're going to be looking at is I've just done some back testing on a pair just to help explain the concepts, right? Because we need a chart, of course, to do that. Now, this is the Euro GBP 15-minute time frame, right? This is the Euro GBP M15 time frame. So I typically stick to the 4-hour and the M15. I don't go below the M15 and go to the M5 or just generally the very lower time frames because we just save that for the members, right? But everything else you need is essentially free on the channel, right? And just want to say markets are fractal. So what happens on the higher time frames, you can apply directly to the lower time frames as well. So what you see on the M15 or the 15-minute chart, you can apply to the 15-second chart, right? Or the 1-minute chart, or the 5-minute chart, or the 3-minute chart, or the 10-minute chart, whatever chart you wish to trade off. You can apply these concepts because we understand that one of the most underpinning fundamental principles of any market or asset is the fact that from a charting perspective, the principles are fractal and the markets are fractal in itself. So these same applications and these same theories and methodologies and ideologies apply to any time frame if you're willing to understand the concepts, number one, and number two, apply yourself, right? This is the two things. Understand the concepts first and apply yourself to do it consistently being number three, right? So if we go into the Euro GBP price action analysis over here, right? Just to give you a bit of mid time frame analysis first, this was our Monday. So we were in bearish territory, right? But how can you buy, right? We're going to be dissecting a buy trade. How can you buy in bearish territory? Well, the short answer is liquidity, right? How do you use liquidity? And that's essentially the backbone of today's session. So here we go. This is now Wednesday, the 6th of March, so about a month ago, or exactly a month ago from the time of recording. What we have over here, is, as you've seen in a lot of my videos, is that we have the Asian range over here. So what does this Asian range establish, right? Why do we need this Asian range, okay? This Asian range over here. Now, this Asian range is what we can call our manipulation pool or simply our liquidity pool. So what we have over here is we have the Asian range over here, right, which I've labeled just above. Now, this Asian range aims to build liquidity in the markets, right? So this Asian range is what we use as the manipulation fuel, as the manipulation tool. And how do we do that, right? How do we actually go about doing that? And this is where the London session strategy gets involved, right? What we're looking for is we're looking for, in this stage, a two-phase manipulation. And you want both of these manipulations to typically, in the London session, happen between, if I give the timings now, you want it to happen between 2 and 5 a.m. Eastern Standard Time, right? 2 to 5 a.m. Eastern Standard Time, right? So wherever you are around the world, this is New York time. So please calibrate that to wherever you are. So for example, if you are living in London, which is where this video is being recorded, so this trading view here is operating on London time, you will need to add 5 hours to this. So this is going to be from 7 to 10 a.m. UK time or 2 to 5 Eastern Standard Time, right? So I'll keep everything to Eastern Standard Time on the chart. So what we have over here is we have an Asian session, and the trick to the London session between the timings I just mentioned, so I'll just put the timings up here again. You want it to be 2 to 5 a.m. Eastern Standard Time. So the trick to understanding how to use a London session is to look for time-based liquidity sweeps. And what do I mean by that? What you're looking for is, in a bullish market, you're looking for a sweep of the Asian high followed by a sweep of the Asian low, right? So these are the two forms of manipulation you are looking at, right? So you're looking for a sweep of the Asian high and then a sweep of the Asian low. So essentially we have a two-phase manipulation model in the London session, right? So we have the Asian sweep high or the Asian range manipulation phase one, and we have the manipulation down here, phase two. And this is also on the chart over here. So we have the Asian range manipulation phase one, and we have the Asian range manipulation phase two. So what does this tell us from a liquidity standpoint and from a manipulation standpoint? So what we have over here is when we see price run up over here, so we see price running up just like this, we see a run up. What would this entice people to do? What would this entice the retail, the uninformed, the traders who don't trade ICT or whatever you want to call it, people who don't truly understand time and price theory, what's going to happen is they're going to get enticed to go long, right? So this here is an enticement of early buyers, right? Now, when you understand how this will work, right, when you understand and you gain more experience in the market, you will understand that these are simply early buyers in the market, right? These are early buyers. Let me just spell that correctly. These are early buyers, and the purpose of this is to generate liquidity in this region over here, right? There's already liquidity as in Asian low liquidity, but we're generating liquidity in this region over here, right? And again, you've already guessed. You can probably guess what happens when we have the manipulation phase 2, or simply the Judas swing, right? This is the Judas swing or the manipulation phase 2. You can call it whatever you want. It's really the same thing. Some of the private students prefer to call it manipulation phase 2 because they understand the different phases of manipulation, because there's slightly different entry models you can use on the lower time frame to get involved. This happens to be one of them. So when you have a manipulation like this, sweeping the Asian high and then the low, what you have is you have buyers enticed that get swept out, right? So the early buyers get swept out, but what else do you entice? You entice sellers, right? Sellers get enticed at this point. So you want to ask yourself, where do the sellers keep their stop losses? Well, you probably guessed it. It's actually above or pretty close to the first manipulation phase. So it's going to be up here. So there's going to be a ton of liquidity resting over here simply from uninformed, impatient traders who don't understand time and price theory. You can look at it that way. You can think of it that way. That's what helped me establish these entry models. So what we had over here, if we go to the live price action, is we had price giving us a sweep of the Asian low, right? So we had the Asian low that was swept just over here like this, right? This happened after price swept the Asian high. So first we have manipulation phase 1, then we come down and we have manipulation phase 2. So we have early buyers swept, they've been swept out. Now we have sellers being swept, right? As you can see, they get swept out as well. So you now want to ask yourself, how do we use the rest of the London strategy to get involved? Now, the rest of it is fairly straightforward, right? You need to identify an order block to enter off, an order block. So the most important thing when it comes to an order block is, some people are going to say breaks of structure, some people are going to say premium and discount, some people are going to say fair value gaps, and all of that is true. Those are the rules to an order block, right? Those are the three rules, right? We have number one being a shift of market structure, or a market structure shift, MSS. We have number two, that is essentially the fair value gap, our famous ICT concept. And we have rule number three, which is the PD array. So you want to be buying in the discount. So in this case, we're looking for a discounted area or a discounted low, right? These are the three rules to any order block on any time frame. So this is correct. But what comes before all of this, right? So let's put this below. There's something that comes before all of this, right? And it is, like the title of this video suggests, it is time. Time comes first. Time is very important. So you're looking for a time-based fair value gap, right? You want all of these things to occur on the basis of time, right? So you have a market structure shift in the London session. Again, that London session, what is it? It's anywhere between 2 and 5 a.m. It's okay to take an entry slightly after these times, but the fair value gap, which is the most important thing, must occur between 2 and 5 a.m. for it to be a high probability order block, okay? So what we had over here is we had price giving manipulation phase 1, manipulation phase 2, and then we had the shifter market structure just over here, right? So this over here represented that shifter market structure. It's okay if it coincides. It's okay if it's the same as manipulation phase 1. That's fine. So we have a break of structure just over here, right? So this is the MSS, or the break of structure, whatever you want to call it. And it's important to understand now, we have a new structural range to work with, a new particular structural range, right? Simply from this swing low, which happens to be the Judas swing, very common occurrence, up to this swing high over here, because this is the swing high that was produced. So now you want to ask yourself, we have a discount over here, and you want to be selling off a fair value gap in the discount. So here is a very clear example of that, right? So we have an order block. Now, this is another question I get, which I'm going to clear up. A lot of my students ask me, I'm going to make it very clear here in this YouTube video. My order blocks are the last candle before the inefficiency. So this here is the fair value gap, right? This is the fair value gap, but that's not the fair value gap candle. The fair value gap candle is actually below that. It's the last candle, so this candle over here before the fair value gap, right? So this now becomes the order block, right? This here is the order block that people need to enter off, right? So this is the OB, or the order block, okay? So with that being said, we understand it ticks all the rules, right? So we understand that it's below this equilibrium. So we understand that it's in a discount. We understand there's a fair value gap and a shift of market structure, right? So from here, the entry becomes quite self-explanatory at this point, right? Notice how the wicks respect this, right? We only have wicks entering just to fill the fair value gap, right? Wicks tell the stories a lot. Bodies and wicks. Look at the price action. The bodies stay out. We only have wicks coming to mitigate, right? Mitigate and fill the fair value gap, right? A safe stop loss. You don't want to be too greedy with your stop loss and have it all the way here because there could be imbalances on the lower time frames. Now we haven't gone into the lower time frames. Again, that's just kept for the members. But for argument's sake, just to keep safe on the 50-minute time frame, because you can trade off the 50-minute time frame very, very successfully. I do that from time to time. You can have a stop loss which is still 4.7 pips or just under 5 pips, so a very good stop loss nevertheless. And from here, you now want to ask yourself, where do you target, right? As an ICT trader, where do you target, right? The answer is liquidity, but which liquidity specifically, right? Because we've already swept Asian range high and Asian range low for the day. So once the Asian liquidity has been swept, right, the next liquidity pool you want to target is essentially the previous day high, which will always be available. 9 times out of 10, the previous day high will always be available, right? And the previous day high is all the way up here. So this is Wednesday the 6th. You want to target the previous day high from the 5th, right? Previous day high or PDH, right? This is classic liquidity concepts 101. I have made a separate video on previous day highs and lows. So if you haven't watched that, I recommend checking that as well. And you can simply target the previous day high for a 1 to 3 trade, right? So if you like this video, give it a like and thumbs up, and I look forward to seeing all of you in the next one.